Welcome to the deep dive. Broadcom's Q3 25 earnings just landed, and wow, big beats, strong guidance, especially on AI.
Yeah, really impressive numbers. And the market's buzzing about this mystery $10 billion AI customer. That's the big story here.
Okay, let's unpack the immediate wins first. So adjusted earnings per share were $1.69. Analysts were expecting $1.65.
Right, solid beat there.
And revenue, $15.96 billion, again, higher than the $15.83 billion consensus. That's about a, 1.8% positive surprise on EPS?
Which is pretty good, but it's why they beat. That's interesting. It's not just small steps. It's tied to these big strategic moves into high growth areas.
Like AI, obviously.
Exactly. And their overall financial health looks, well, good, according to Investing Pro. You see it in the gross profit margins, really strong, around 77-78% this quarter.
Wow.
Yeah. The CFO, Kirsten Spears, pointed out consolidated revenue grew 22% year over year, a record $16 billion. Adjusted EBITDA, up 30% to $10.7 billion.
So that's strong operating leverage, right? Profits growing faster than revenue.
Yeah, precisely. Shows good efficiency, good cost control. For you, that signals a well-managed operation, especially during growth phases.
Okay, so the foundation's solid. But let's get to the main event. The AI engine. Q3 AI chip revenue jumped, what was it, 63% year over year?
A massive 63%, yeah.
Yeah.
Hit $5.2 billion. They actually beat their own forecast of $5.1 billion.
And that's like 10 straight quarters of strong AI growth.
10 consecutive quarters. It's quite a streak. We know they make these custom chips, these XPUs, for giants like Google.
Right.
But here's where it gets really interesting. CEO Hock Tan dropped the news. Over $10 billion in orders for these XPUs from a fourth new client.
A fourth one. And $10 billion from just that one.
That's the figure. This client was just a prospect before. Now they've placed actual production orders, so they're officially a customer.
Okay, hold on. A single new client order worth $10 billion. That's going to massively change their future outlook, surely.
Absolutely. It's expected to significantly accelerate their fiscal 2026 AI revenue forecast. They were talking maybe 50-60% growth before. This likely pushes it well beyond that.
So when do these chips start shipping?
Hock Tan said shipments should start pretty strongly beginning 2026, specifically mentioning Q3 of fiscal 26 as a likely time frame.
And this custom chip business, the XPU part, what portion of their AI revenue is that now?
With this new customer, plus growing volume from the other three big cloud players, XPUs now make up 65% of their AI revenue.
65%.
Yeah. And they expect to keep gaining share there, meaning networking will become a smaller percentage of the AI mix by 2026.
So this really raises a question for you listening. Does this huge commitment to custom chips signal a major shift? Are hyperscalers moving away from general-purpose chips like NVIDIA's GPUs for their biggest AI tasks?
It certainly looks like a strong trend. These hyperscalers want chips tailored exactly to their massive workloads. Better performance, better efficiency, maybe even better cost at that scale. It suggests a move towards more, compute self-sufficiency.
And the immediate future looks just as bright. What's the Q4 AI guidance?
For Q4 25, they're forecasting AI semiconductor revenue around $6.2 billion.
$6.2 billion. That's up 66% year over year.
Exactly. And that number blew past analyst expectations, which were closer to $5.7 billion. The momentum is clearly building.
Okay, so the AI chips are the engines.
Yeah.
But you need tracks for the train, right?
Yeah.
That brings us to networking.
Right. Hock Tan's famous line, "The network is the computer." It's becoming truer than ever with these huge AI models and sprawling compute clusters. The network is critical.
So they're building the nervous system too, not just the brain. What are the key pieces there?
Well, they have solutions for different scales. Inside the rack, scaling up maybe 512 compute nodes.
Yeah.
They have Tomahawk 5. That's an open Ethernet switch.
Okay.
But then for flattening the network, really reducing latency and power across the cluster, there's the new Tomahawk 6. That's a 102 terabit per second switch. Huge capacity.
102 terabits.
Oh. And then for connecting across data centers, scaling beyond 200,000 nodes, what they call scale across, you need something like their Jericho 4 Ethernet fabric router. That's 51.2 terabits per second, but with deep buffering and smart congestion control, which is crucial at that massive scale.
Is this all proprietary stuff, locking customers in, or more open?
They stress it's well-proven open-source Ethernet, and importantly, it's disaggregated from the XPUs. So you're not locked into using their custom chips with their networking gear, or vice versa.
That offers flexibility.
Exactly. And they argue this open approach can actually beat proprietary fabrics like NVLink or InfiniBand on things like latency, just through sheer investment in the core tech. the ASICs, the SerDes, packaging, low power.
Makes sense. Okay, moving beyond hardware. Infrastructure software, including VMware, also had a strong quarter.
Very strong. Revenue grew 17% year over year to $6.8 billion. That was also ahead of their outlook.
And the VMware integration, how's that going?
Seems to be progressing well. They released VMware Cloud Foundation, VCF 9.0. It's basically their integrated platform for hybrid cloud run stuff on-prem or in the cloud, handle any workload, including AI. They're positioning it as a real alternative to just going all in on public cloud.
And are customers buying into that vision?
The numbers suggest yes. Over 90% of their top 10,000 VMware accounts have either adopted or bought VCF licenses already.
90%. That's high adoption.
It is. So now the focus shifts, to making sure those customers actually deploy it successfully and get the value out of it.
Okay, so AI is booming, software looks strong. Yeah. But what about the parts of the business that aren't AI semiconductors? How are they doing?
Yes. That's where the picture is quite different. Non-AI semiconductor revenue was $4 billion in Q3, basically flat compared to Q2.
Flat. Okay. Any bright spots there?
Their broadband business showed good sequential growth, actually. But enterprise networking, server storage, those were down. Wireless and industrial were just flat.
So not exactly roaring back.
No. Hawk 10 called it a slow recovery. He actually described it as U-shaped.
A U-shape, meaning it stays low for a while before climbing back up.
That's the idea. A prolonged trough. He doesn't expect meaningful improvement until, say, mid-2026, maybe even late 2026.
Oof. That's a ways off.
It is. Now, non-AI bookings were up 23% year over year, which is positive momentum, but it's just not in the same league as the explosive growth they're seeing in AI.
So for you, the listener, this paints a picture of a company firing on maybe 2.5 cylinders. AI and software are red hot, broadband is okay, but the rest is kind of idling.
That's a decent way to put it. They seem to be managing expectations for those slower segments while pouring fuel on the AI and software fire. It's a pragmatic approach, probably.
Okay, looking at the overall financial strength then, what's the backlog look like?
Record consolidated backlog, $110 billion.
$110 billion.
Yep. And at least half of that is semiconductors, mostly driven by AI demand. So strong long-term visibility there.
And cash flow. Shareholder returns.
Also record territory. Free cash flow hit $7.0 billion for the quarter. That's up 47% year over year, and it's about 44% of their revenue. Pretty efficient cash generation.
And they return cash to shareholders.
They did. Return $2.8 billion through dividends, keeping the quarterly payout at $0.59 per share.
What about the outlook for next quarter, Q4?
They're projecting consolidated revenue around $17.4 billion. That's a 24% jump year over year. And they expect to maintain that strong adjusted EBITDA margin around 67% of revenue.
So continued strong growth and profitability expected? And the leadership seems stable too.
Yeah, that was another point. Hawk Tan agreed with the board to stay on as CEO through at least 2030. That signals strategic continuity, which the market generally likes.
And what are the analysts saying now?
Yes.
Still bullish?
Overwhelmingly, yes. Goldman Sachs, for example, reiterated their buy rating, kept a $340 price target. They specifically called out the AI growth and the strong Q3.
$340 target. Others?
Evercore ISI, Cantor Fitzgerald, they also raised their price targets. The focus is consistently on the AI potential and the data center connectivity story.
But it can't all be smooth sailing. Analysts must see some risks, right?
Oh, absolutely. They noted potential headwinds. Things like, what if AI infrastructure spending slows down overall? Or what if Broadcom loses some share in the custom chip space? Then there are the ongoing inventory issues in those non-AI segments we talked about. And of course, increasing competition for VMware. These are definitely things to watch.
So how should you, listening, weigh those risks against this really optimistic story?
It's about execution, isn't it? Can Broadcom keep winning these massive custom AI deals? Can they successfully navigate that U-shaped recovery in the other segments without it dragging down overall sentiment? Can they fend off VMware competitors by delivering value with VCF? They seem to have strategies like the open Ethernet approach, maybe hedging against losing custom compute share. And they're being upfront about the non-AI recovery timeline. But yeah, for you, it's about watching if they can keep executing across all these fronts. It's definitely a high-stakes balancing act.
So bringing it all together, what does this Broadcom story mean for you as you look at the tech landscape, innovation, market positioning?
Well, Broadcom is clearly making huge bets on custom AI silicon and the networking needed to power it. Plus, they're building out this substantial VMware software platform. They're actively trying to reshape key parts of the tech world.
Yeah.
And maybe the big question this leaves us with, for you to think about, is this. If these custom AI chips really become the standard for hyperscalers wanting compute self-sufficiency, how fundamentally could that reshape the entire AI chip market? Could it democratize access to powerful AI, maybe even disrupt the current big players in the coming years?
Lots to consider as these tech giants keep pushing the boundaries of AI. Thanks for joining us on this deep dive.